Hello, this is Mark from TradeInform.com and welcome to this video on how to calculate Renko charts. If you currently have charts that look something like this, but would prefer them to look something like this, then this is the video for you. Renko charts, like a lot of the Japanese charting styles, do a great job of making what we see on the screen on our charts simpler. In this video, I will be showing you how you can calculate Renko charts and also what is the point of Renko. And in the follow-up video, I will be showing you how you can take Renko charts in Excel and you can backtest them as part of a trading strategy. So many years ago, when I used to work in an office, I had a manager who had the most extraordinary desk I had ever seen. And what was so unusual about this desk was that it was completely empty apart from a single pen. And in those days of paper full offices, when everybody had reports, letters and books strewn across their desks, it was all the more remarkable. And I think there is a lesson in this for all of us traders. All of us are guilty of overcomplicating, overthinking and overanalyzing the markets. And one way that we can deal with this overcomplicating is with Renko charts. So if we look back at the chart, we can see that there are a few remarkable things about the Renko bars. And one of those is that each of these blocks is the same size. Exactly the same height. The other thing that is also immediately apparent is that the blocks move in waves or trends. And if we compare it back to the original market, we can see exactly those, or very similar, waves and trends there, but we can see them so much more clearly in the Renko bars. And the final thing is not immediately obvious, but it is clearly there once you're looking for it. And it's the fact that at each change in direction from green to red and back to green, we have a hanging block or brick, as they're sometimes called. And this is quite a significant feature of Renko bars. And the reason that we have a hanging brick or block is that it takes more effort for using the Renko system. It takes more effort to change direction than it does to maintain the same direction, which is why we can have these long unbroken trends. Okay, so if we start right at the beginning here, we can see that we've got our initial bar here starting at 1300. So how do we calculate Renko charts? Well, the first thing to be aware of is that Renko always uses the closing price. And it doesn't matter what time frame that you like to use. It could be 5-minute bars, hourly, daily or monthly, but we've always got to use the closing price. So the thing to be aware of is that the direction of the preceding bar always matters. Renko favours the direction in which the market is moving, so that, as I've said before, this is why we get these dangling market turning points, because we have to have a move twice as large in order to change direction. So if we're moving upwards, each 100-point bar is created with a 100-point move. But if we want to change direction and start going downwards, we need to have a move equivalent to 200 points. And this is why we get these nice trends, because a lot of the moves that we see in the markets, the chop ups and chop downs, aren't big enough to trigger a Renko reversal. So let's start right at the beginning. This very first bar starts at 1300. Now this is a rounded figure that I've used to make this example easier to understand and make the charts look a bit nicer. So we start at 1300 points. So before we can draw any bar at all, even the very first one, we have to close 100 points or more in either direction. So because this very first bar is an up bar, we know that we have closed at least greater than 1400. So 1400 or greater, we've got our first bar. So then if we look at bar number 2, we'd naturally assume that bar number 2 starts at the end, in which case at the top of bar number 1. But that's not the case here, because we don't know whether it's going to be an up or a down bar until it's been created. So what we do know is that our upward target to create bar number 2 as an up bar is 1500, which is 100 points greater than our previous target. But if we want to make a down bar here, we would have to be lower than 1300. So as we can see, bar number 2 is created and we have closed higher than 1500. Now, as we can see, we have a market turning point, and so the target to the upside would have been a close equal or greater than 1600. But in this case, we actually get a close lower than 1400. So we get a new down bar. At this point, we've established a new downtrend. So our target to the downside is 1300. If we were to reverse and put in another new high, again we would have to be greater than 1500. So you can see the logic here. Once Renko is in motion, either to the upside or to the downside, each successive bar is created with a move equivalent to the bar size. But because we get these dangling bars, we know that we actually have to have a move twice as large to establish a new move in the opposite direction. So as we've gone through this calculation, I think you can see the whole logic and purpose behind Renko. What it's doing, it is a form of breakout strategy. It's a form of trend following strategy in that the trailing stop is moved behind us. Effectively, each new bar is creating a new moving stop behind us, and our price is moving along in the direction of the market. One feature of Renko that may not be immediately apparent is that we tend to assume that each bar is going to be equivalent to a block, providing we move up by the minimum amount. But this is not a time-based charting system, so that if we have an extremely large move within our time period, say if we have a move of 300 points, we wouldn't just draw one Renko bar, we would potentially be drawing 3 new ones if we've closed above the equivalent of 3 bars. So each bar, although it normally moves slower than the normal market, if we have a very large price move, that would be reflected in our Renko bars. So I hope you found this video useful. Please remember that we have another video in this sequence. The link is on the screen and please click on that. If you'd like more information and more videos like this, please remember to hit the subscribe button. And for more information about trading the financial markets and how to backtest your trading strategies, please go to www.tradeinformed.com.